It has happened, fam. It has happened. It's locked and loaded. It is real. EA has posted an official statement describing how they have agreed to sell themselves basically to a group of investors as part of a buyout for $55 billion. And it is specifically a leveraged buyout, which I will explain momentarily. But in practice, what this basically just means is that EA is going to go from being traded on the public stock exchanges, and it's going to be privately held by this group of owners. So it's being taken off of the public trading platforms, and it's going to be privately held. The price that they're offering for it is pretty steep. Right before this news was leaked on Friday, it was trading at a market cap or company value of about $42 billion. All a market cap is if you take the total number of outstanding shares, which are the little pieces of the pie that make up the company. You take all of those pieces of the pie, so you take the whole pie, and you multiply it by the per share price, you get the market cap, which should, in theory, give you the value of the company based on what investors believe. And so the moment they revealed this, of course, the valuation goes up because they're saying they're willing to pay $55 billion for it. Now, on Friday, this leaked because of a Wall Street Journal article where basically somebody leaked and said, oh yeah, they're going to totally do this, and they're pricing it at $50 billion. Today it was revealed that it's actually $55 billion, which is wild. I think EA is a very well-run company financially. If you look up like most company like investment breakdowns, like Morningstar, for example, is a big one. Morningstar will do breakdowns of companies and rate them like by how good they are. And one of the common things that they'll have on a Morningstar report or other companies that do similar ratings is like stewardship. Do they have an example of this? They'll say like, oh, how do we rate their stewardship? Which is basically just a fancy way of saying how good is the C-suite management. And EA has always had outstanding stewardship. They have very capable leadership financially. And from Wall Street's perspective, they're very, very good. And so I've always thought that it was a solid company. I didn't always like their products, but I always thought they were a solid company. I don't personally think that they're worth $55 billion, but that's, you know, whenever you take a company off of the public exchanges and you're buying them out, you have to offer a premium price in order to get that to happen, because basically the board of directors votes on it. And typically the board represents the biggest shareholders. And if you're going to take it off the market, you have to be able to say that this is in the best interest of the shareholders. And in this case, I think it is, because I don't think the stock was going to reach this price anytime soon. So I think it does make sense for the shareholders. Now, what is specifically being offered, to get into the nitty gritty specifics, is a leveraged buyout where they're going to sell themselves to Saudi Arabia's Sovereign Investment Wealth Fund and a pair of private equity firms in a deal that values the company at about $55 billion, marking the largest leveraged buyout on record. And later in the article, they have a breakdown of some other examples, like TXU for $48.4 billion back in 2007, Atlantia bought out by Edison, I don't know, and Blackstone for $45 billion in 2022. Walgreens Boot Alliance bought out by Sycamore Partners for $39.4 billion. So this will be the largest buyout, leveraged buyout, in recorded history. So it's a big deal. It's a big deal, which is why it's not just game outlets that are describing this right now. It's also being discussed by Bloomberg and every other outlet that covers finance. Saudi Arabia's Public Investment Fund, along with Silver Lake Management and Jared Kushner's Affinity Partners, agreed to pay $210 per share in cash at 25% premium to where EA traded before the talks leaked on Friday. 25%. What do they see? Where do they think the value is? Because if you're paying that much, that's interesting. It's very interesting. It's like if, I found a house I really like. Looks really good. One problem is it's a $500,000 house. $500,000 house. But I'm going to pay $625,000 for it. That's a huge markup. That's a huge premium. What do they see? Why do they think it's worth the premium? Something to think about. JP Morgan Chase & Co. is providing $20 billion of debt, making this the largest commitment for a buyout ever. That's like what, 40%, 30, I think I put it in the calculator. I think it's at 36% of the deal is made up in debt. It's a lot. There's a lot. We'll continue and then I'll offer my thoughts. The the record-shattering going private sale is the latest sign that the deal boom expected under the administration of President Donald Trump is starting to take hold, as it cemented the most active quarter for mergers in more than 3 years. It also shows the pivotal role that sovereign wealth from the Middle East is increasingly playing in the biggest deals. Electronic Arts, the maker of EA Sports, FC, and The Sims, is selling amid sluggish growth for the $178 billion video game industry after sales swell during the pandemic lockdowns. The company, which has experienced numerous rounds of layoffs, has been seeking new areas of growth to inspire players who have gravitated towards free-to-play franchises that are continually updated rather than splash out for new titles that can cost as much as $80. The transaction will be funded with cash from the consortium of partners, and Saudi Arabia's private investment fund will roll over its existing 9.9% stake in the company, constituting an equity investment of about $36 billion. The deal comes with a termination fee of $1 billion should it fall apart, according to a company filing. The pact displaces the roughly $45 billion leveraged purchase of the power company TXU in 2007 as the largest buyout on record. It's also one of the largest merger and acquisition deals of 2025 and shows Wall Street's appetite for game-changing mergers despite recession fears and geopolitical concerns impacting the broader economy. Right now, the shares have risen 4.8% Monday morning in New York to 202.73. And as you can see, as they described earlier, their official offer is $210 a share. So that difference between 210 and where it's trading right now, 202, is literally just risk. That's like a literal monetary representation of the risk of the deal not going through. If you remember the Activision Blizzard purchase from Microsoft, as time went by and the deal got further and further along through the regulator stuff, their offer was up here, and over time the share price, it was down here, and then it shoots up when the deal is announced. Regulators say, we're going to oppose it. It drops a little bit more, and this is all literally just because this is the risk involved. So investors don't want to pay or trade it at the max value, what they offered, because there's risk that the deal doesn't go through. And if the deal gets canceled or blocked by regulators, the stock price is going to plummet, you guessed it, probably back down to where it was trading. So that gap is literally just the risk involved. But as time went on and the deal got closer to getting approved, it eventually settled up closer and closer to the initial offer price. And that's what's happening here, is that the $8 gap, $7 gap is basically just the risk involved with it. Other gaming companies like Take-Two and Roblox also gained on the news. The reason for that, it could just be that it's seen as a sign of optimism in the gaming space. So investors are putting more money into the gaming industry because they're like bearish on the games industry. I don't know, however you want to look at it. It could also be totally unrelated. It's just stocks. Stocks. So here's the thing. There's a couple of key points here to take away. For one, the Saudi Arabian investment fund has been throwing money at pretty much anything that they could get their hands on for years. As you can see in this breakdown, they even describe how Saudi Arabia's investment fund will be rolling in the 9.9% stake in the company that they already have. So they already own just under 10% of EA. Oh, did I say bearish? I meant bullish. Embarrassing. So get it, bear. Okay, anyway. So they already owned a 9.9% stake in the company. They already owned a huge chunk. And now they're just coming in and they're going to take it off of the public market and take complete control. Now, their historical approach, of course, this is not just the Saudi investment fund, it's bigger than that, but their historical approach has been to be pretty hands-off. Amazingly enough, the Saudi investment fund's goal is to basically take all this money made from oil and then try to diversify their holdings, because the Saudis are not stupid. They know that in 50 years, oil will maybe not be the centerpiece of transportation that it currently is. There's going to be other advancements in energy production. There's going to be pushes from all sorts of global companies towards EVs from a car perspective. And then even with international transport, there's discussions on overhauling a bunch of stuff. So they want to diversify. They don't want to have all their eggs in the oil basket. So they're spending a ton of that money buying little shares of a bunch of different things to diversify their holdings. So far, they've been very hands-off. They buy a chunk of EA, like 9.9%, and they just kind of sit on the sidelines. They don't mess with it too much. They don't rock the boat, and they just want their cut of the pie every time profits come in. Similar to like Tencent. Tencent, with a lot of companies, will throw money in it and then just kind of sit on the sidelines until they don't. And when they come in and they clean house, it can get dirty. But with this, initially when the news broke, I was like, honestly, it might not change a whole lot. And when you go and remove yourself from the public trading aspect of corporate existence, a lot of the time it can free up your investments from short-term gains, and you can focus on long-term gains. Because the danger with quarterly reporting of financials and stuff, which is what you're required to do right now in the US, if you're publicly traded in the US, you have to report your finances every quarter, so every 3 months. The danger with that is that it then reworks your entire company where you need to be short-term focused, because every 3 months you have to justify what you've been doing to investors. You can't tell them, yeah, we're going to have a pretty rough 2 to 3 years, but in the future will be great. You can't say that. So you constantly are chasing short-term gains and profits over long-term improvement. It's like the classic Apple example where they're like, yeah, we could invest heavily in major technological improvements and product revisions and updates and stuff, or we could release the same iPhone we've released over and over again for the last 10 years and just charge $100 more for it and make the packaging smaller and put it in some new colors. And then we'll make lots of money and prices will be low. Like it's the same exact thing. It's why Warren Buffett, the greatest investor of all time, in my opinion, and in the opinion of many others, I'm sure, he has said many times that he thinks companies should only have to report financial earnings every 6 months. He's like, break it down to 6 months. You'll still have a good finger on the pulse of each and every company's health, but it'll allow them to be more long-term focused. When you're privately held, though, you have none of those obligations because you don't have to report anything publicly. You're privately owned. So you don't have to tell everybody publicly how you're doing or what's going on behind the scenes. You can just do what you think is best for the company long term. And that is why, like on Friday when I heard this news, I was like, honestly, it might actually be good for EA to stop being publicly traded. They won't have to chase the carrot of quick returns every 3 months. But then like the details of the deal came out with this announcement, and it's now much more worrisome to me because $20 billion of the $55 billion deal are debt. 20 billion. That's a lot. Okay. That's a lot of money to owe to a bank like JP Morgan Chase. And they're also paying a 25% premium on what professional investment funds and firms thought was a fair market price. On Friday morning, the stock was trading at an effective market cap of like $42 billion. That's what investors thought the company was worth. And then in the matter of hours, because this news breaking, now it's being priced close to 55 billion. So where do the investment firms that are buying this out, where does the Saudi Arabian Sovereign Wealth Fund, where does Kushner's Affinity Partners and Silver Lake, where do they see that like 10 to 13 billion dollar gap? And that's not even factoring in the cost of the debt, right? Because you're paying a $13 billion premium, basically overpaying by $13 billion, 25%. And then you're also buying it with a lot of debt. And you don't do that unless you think there is some value other people are not seeing. So my question is, what is that value? Where do they, like, what do they see that professional investors on Wall Street did not see? Where is it? What do they see? And this is why I'm worried, because I think, you know, in the context of what we're discussing, the only thing they see is some chunk of change that's untapped right now that values the company higher. What is that chunk of change? It's probably more monetization opportunities. It's that they don't think the company is utilizing their IP as well as they could. It's that they think that they could maybe push monetization further on the established IP they have, whether it be Madden or FC. It like, you don't buy out a $55 billion company and overpay just like, you don't do that. You're buying it at 55 billion because you think it's worth 55 billion. Again, the example I gave earlier is like, you see a $500,000 house. Cool. That's an awesome house. Looks beautiful. I think, with the number of bedrooms it has, it's looking great. But then you come in and you offer $625,000 for it, when everybody else agrees it's worth 500. You're overpaying by 25%. And let's say you're taking out a mortgage at a time where debt is not free like it was during COVID. You're paying a pretty hefty interest rate on it, I'm sure. Why do you think it's worth $625,000? Like where is that $125,000 gap coming from? What is the opportunity that you think you see that no one else sees? That's what I find interesting about this, because they see some big opportunity that nobody else seemingly can see. And there might be an opportunity there, and this ends up being a phenomenal deal and they make tons of money on it. It might also just be a mistake, because there's plenty of examples of companies doing buyouts of other firms and then it ends up being just a total disaster and it doesn't work at all. So it happens a lot. And it's somebody, yeah, I see you saying, well, the Saudis have they have the royal money, so they are the type of people to massively overpay for things. I think in the context of Saudi Arabia's investment pursuits, they are sharks. I mean, there's just no ifs, ands, or buts about it. They know what they're doing. They're some of the most prolific and also consistent investors worldwide. And they have deep pockets for sure, but that doesn't necessarily mean that they're just throwing money at stuff that doesn't make sense. They see some opportunity here, some opportunity. So I find it interesting. As far as I can tell, EA, solid business. You can make money on it. I don't know where you make money on it, overpaying by 25%, and then also taking out a crap ton of debt to do it. So here's the other possibility, okay? Because there's two sides of every equation, right? There's the assets and then there's the liabilities on the other side and the equity and everything. And in this case, it's possible that they see an opportunity, not just in increased revenues to make up some of that gap, some of that $13 billion gap. They like, oh, we can make more money if we push monetization here, here, and here. It's also possible that they think that they can cut costs to increase the profit margin by downsizing, by doing layoffs, restructuring, and stuff like that. That's also a major component of it too. So after seeing how much debt they're bringing on to get this deal done and the crazy premium they're buying already, like the $50 billion price tag was a good bit too much. Seeing $55 billion, I'm like, what are we doing? And I think that the odds have skyrocketed that they probably are going to do a lot of restructuring after this. There's added questions and concerns over like censorship and stuff. Are they going to allow for anywhere near, like, Saudi Arabia's not big fans of gambling. Really not big fans of gambling. Are they going to allow for like the loot box stuff to happen? Are they going to do that? Or are they going to shut that down? And it'll be like a good thing to censor. It's like excessive gambling in video games. Or are they going to censor all of the other stuff where all of a sudden in every EA game, it's just like super censored to adhere to their guidelines? I don't know. I genuinely don't know. I don't think anybody knows. But just on a financial side of things, financially, I don't see how this deal makes sense. They are very smart. They're very capable investors. And as I've said it before 1,000 times, typically in business, if something just does not make sense, it's because you're missing a piece of the puzzle. And in this case, I think we're missing the piece of the puzzle that makes this make sense. Sometimes it is just delusional and it just doesn't make sense and they're just throwing money at something, like some of these AI deals that are happening where you're just like, what? It's like that one AI firm that got valued at like over $1 billion. And it turns out the entire AI that they had was just a call center in India. And it was just people pretending to be robots, basically responding to prompts. It's like totally fake. Like sometimes it's just stupid stuff like that. But in most cases, especially when $55 billion are on the line, you're missing a piece of the puzzle if it doesn't make sense. And in this case, I think we're just missing a piece of the puzzle. They see something that we don't see and that no other investors see. And that's really bizarre. Numbers are made to go up. Yeah, but it's also why it's so interesting, because right now is, by almost every metric, a terrible time to do something like this. Like, debt is presumed to get cheaper in the next 2 years, especially as we most likely head into a recession and rates start getting cut more aggressively. So debt's about to become cheaper. So why do this right now? It's also like the video game industry's growth has slowed to an absolute crawl, and by some metrics is shrinking. So why are you spending $55 billion on a company? Like, you're paying a premium for the company. Like, there is some huge component that we don't see that they do. And I find that very interesting. I find it exciting because I'm like, I want to know what they see. I want to know. I don't know what it is because I don't think it makes sense, but there's something they see that excites them and makes them think that this is worth paying a crap ton for. And it's very interesting. They don't have to make money on the investment. Saudi investment fund is too big to fail. They are westernizing. Well, that is a component of it. They want to just get money in Western companies. Absolutely. The other piece is that Saudi, but following in that vein, Saudi Arabia's public investment fund is a major part of this. Mostly it seems because they already own 9.9% of the company. So they already had billions, like what, $4 or $5 billion in the company before the deal even was announced. So they had a huge stake in it. They had their foot in the door. They could go and call the CEO. I'm sure they were on his speed dial as a major holder of the company. But there's also other players here, like Silver Lake and the Affinity Partner Group. And those are people that are not just sitting on oil money, and they are making very tactical investments. So what do they see? What does Silver Lake see? What does Affinity Partners see? What do they see? Because maybe Saudi Arabia's public investment fund can eat a loss and can take this, even if it doesn't really make sense. But what do the other partners in the deal see that gets them excited about it? Hopefully it doesn't affect Battlefield 6 poorly. I think it mainly is just going to probably be reflected in a lot of the underperforming titles will get canceled and shut down. I think they're going to do major restructurings and layoffs. I think they're going to really push for probably a good amount of contracted work, and they're going to streamline a bunch of stuff. And I mean, if anything, this type of thing I think is very bad news for like a BioWare, because by every metric, BioWare doesn't make sense right now. It just doesn't. They have released 3 back-to-back-to-back flops that have lost major chunks of money. By no standard in the games industry would any other studio still be open at this point. Any other company would have shut them down after the first flop, certainly the second flop. And the idea that they're open after a third flop is insane. So if I worked at BioWare, I mean, I'd be pretty worried right now. Not celebrating that or anything. I feel for the guys over there working on Mass Effect, but that's just the fact of the matter. So I think that there's probably going to be a lot more shakeups. And I didn't think that on Friday, but that's because I didn't know that they were going to take $20 billion of debt and pay 25% premium to where it was trading before. I don't see how this makes sense. I am not an investment manager with the Saudi Arabian investment fund, so clearly they are way smarter than I am or ever will be. But in my humble opinion, I just don't see how the maths here. I don't get it. But I'm interested to see why they're trying it. So we'll see. But overall, after getting details, what do I think? Do I think this is good for players? No. Do I think this is good for the people that work at EA? No. And do I think that this ends well for pretty much anybody, even the people buying it? Not really. I don't really see that happening. So yeah. Sad face emoji. That's what I'm feeling. I think a lot of people are going to be laid off. I think a lot of projects are going to get canned and shut down. And I think the projects that survive will probably see some major overhauls to their monetization to try and increase revenues. And that's not even taking into consideration concerns over like censorship and all of the other stuff that comes to play when you're talking about the Saudi investment fund owning something. So yeah, all together, sad face emoji. That's kind of where I'm at.